Optimism is gaining momentum. Indicators are improving, and whilst they're still pointing to contraction, they're suggesting it will happen at a slower pace. In some positive news over recent days, both UK and US manufacturing data surprised on the upside, showing that the stimulus is beginning to take shape in both these economies. This was also hot on the heels of encouraging, though tentative, improvements in housing indicators in both economies. Today, the US 30-year mortgage rate fell to a record low of 4.78%. With some positive measures coming out of the G20 meeting, currencies were back in fashion. The New Zealand dollar has skyrocketed through 57 cents overnight and is now gaining on 58 cents early Friday morning trading. Global equity markets are liking what they see, pushing skyward today, likely boosted by the hope that the G20 outcomes would be squarely focused on further action that will have some fairly immediate results. Some interesting developments coming out of the US cow markets are going to have a twofold effect on both our dairy and beef industry. It looks like one of the large dairy co-ops is promoting a large dairy herd cull thought to be up to 150 to 200,000 cows. The purpose is to reduce the number of dairy cows in production in order to limit the supply of milk and bring producer margins back in line with current production costs. According to the co-op, cash production costs by the end of 2008 were $2 over the all milk price, an untenable situation for dairy producers. While grain feed prices have eased somewhat, the milk price is well below sustainable levels. The cull will ease supply in the US as well as world dairy supply, which in the long run will be good for our dairy industry. However, in the short term, the increased supply from domestic cow slaughter will impact how much grinding beef the US will import, potentially impacting local beef farmers on price.